Joining me now is Matthew Boss, leisure analyst at JPM. Matt, welcome. Appreciate you being here.
Absolutely.
So, okay, by the way, does it ever pay off to jump in on a stock like this the day after? It always feels like this is a move you want to fade, or maybe it does build brand equity over time. I don't know.
Look, I think right now with the golf industry, you have the macro and the micro. So on the macro, look, participation is up 20%. That's versus
points, right?
Versus pre-pandemic,
wow.
Yes. And so if you think about the participation in the sport, and then what's leading it is actually off course, which is Topgolf. And that is the Topgolf Callaway combination that you have the stock trading 3 turns below pre-pandemic. And in my opinion, this sport is in a better place coming out of this pandemic than where we were before.
Yeah, even some friends of mine from sort of college friend and retail are launching a female golf apparel brand because they say it's gotten so popular now it needs to kind of catch up and be Lululemoned, so to speak. But how sustainable is this? You know, even in the long run, if people are golfing more than they were pre-pandemic, it starts to feel like, look at PC demand is down. You know, all the PC bubble or the COVID pandemic bubble stuff is unwinding. At some point, won't golf be part of that?
I think what you have to focus on is experiential. And I think the other thing right now that's a big focus for us is health and wellness, outdoor, and really active participation. And that's why I think that the Topgolf Callaway combination has that. Across our coverage, we also in leisure cover Bolero. I think that's a real trend tied to a lot of mom and pop bowling alleys across the country. We cover Brunswick on the boating side. I think that industry also comes out. And then larger picture, we have Nike and Lululemon, which we've talked about on the show before, that I think really play into that casual trend.
I almost wonder if the pandemic breathed new life into some of these brands that were aging and maybe needed that. But do you still see, because when I was looking at some of your notes on this, it does look like your surveys are picking up a moderation and maybe big ticket spending on golf, for instance, like a natural unwind after a heavy spending cycle.
So you have some cross currents that I would say for the front half of 23 are absolutely relevant from some of the store work that we've done. You have apparel overhang right now. Now, part of that is you have disruptive brands. You have the Dunning brand with some new performance fabrications. You have different demographics out there that are really gaining steam. East Side Golf, I would say. And you see a number of different brands that really were on scene down at the Masters last week. We were actually on site, and I mean, I'll tell you, just the difference in some of the experiential and really the excitement around the overall sport. But I also think you have the replacement cycle where you do have new innovation out there, the Paradigm by Callaway, some new irons on the way in the back half of the year from Titleist. And because of that, I think that is where the large ticket macro does play in as well. One
more golf-specific question, if you will. So you're seeing field work pointing to 15 to 35% discounts on some of these drivers and woods and hybrids and iron, and that's across all major brands. So what is that about, and is there going to be a knock-on effect for the big box retailers that carry these things?
I think it's the same as what we see across our larger picture apparel and retail landscape, which is innovation, differentiation, and really those who are spending to drive that are going to win. And I think, again, tying back to the macro, which to me plays into the participation in this sport, which I think is stronger on the way out, I think you do have a lull here that's taking place near term. Part of that is the overall consumer and some of the inflationary pressure that's on them. And then some of it is the innovation that I think is right around the corner. And I think you're seeing it with Paradigm, which was the choice of John Rahm here in the Masters. And I think you're seeing some innovation from a number of different brands.
You're overweight on Callaway and Topgolf Callaway. So I guess finally give us then, going into earnings season, I know we're still maybe a month out from a lot of the retailers, but what is the feeling on the consumer right now? I see data on the one hand, they're stretched on the, you know, and in 10 seconds, if you could.
So we're coming off our conference last week. We had 20 plus companies. I think the consumer is stable. I think you want value and convenience. That for us is off-pricers and dollar stores. And then I would stick with best-in-class brands. And that's where I was saying Nike, Lulu, Callaway, Topgolf, I think fit that bill.
All right. Matt, thanks for joining me here. I really appreciate it.
Great to be back.